Hey, Josh, happy birthday, by the way. So, a couple
Thank
things.
you. Thank
I
you.
would say it's a combination of better than feared results. Remember, the beat numbers, these are lowered expectations. And then on top of that, they spoke about improving outlook for the company's cash app business. And this is all happening in the context of very mixed data points that actually have been impacting the space in general. Obviously, the space's performance has been dismal since November of last year.
Moshe, it's Morgan. You have a neutral rating on the stock. Anything here that would change that?
We've had a neutral rating on the stock, considering a couple of things. One, the multiple. This is pre-November. We're not big fans of the Afterpay transaction. I think the street's love fest with BNPL, buy not pay later, has been kind of changed a bit. From our perspective, this looks more like a subprime lending business. I think you can call it something else if you want. Some people call it BNPL. And I just don't understand the logic for paying. I mean, originally they almost pay about $30 billion for this. Given the correction in Block's stock price, they ended up paying about 10 and change. So I think that's problematic. And then the other thing that we worry about is the fact that the year's guidance is pretty much back and loaded, especially in terms of Cash App's performance and profitability.
Moshe, are there other names in this space that you like a little bit more, even if they're sort of going after the same consumer and the same general idea that you would have more conviction with than just a neutral rating on a name like Block here, even though it's up 26%?
Yeah, we actually became a bit more constructive in the past few weeks on the networks, Visa and MasterCard. The way we see it, inflation is actually going to be a positive for average ticket prices. So this will benefit the networks. And then on top of that, we also like some of the less expensive names in the group. These are companies that have two platforms catering to financial institutions and merchants. So we're talking about Global Payments, FIS, Fiserv. These are companies that are trading roughly in mid-teens, PE multiples based on next year's numbers. They're growing top line about 8%. EPS growth is about 15 to 20. Very reasonable, and I would say pretty defensive, especially in this market.
Josh, what do you think of Block here, and I guess the group in general?
So actually, I'd like to ask a question of my own. One of the things PayPal disclosed recently about their growth strategy was that it really doesn't work. They, I think, were paying $10 as a referral fee to all of their users in exchange for getting friends to sign up for new accounts. And I think the number was 4.5 million fraudulent or fake accounts were opened. So how do these companies continue to grow at the rates that they were from a user-based standpoint? And is any of that really going to be profitable growth from this point forward? Because they already have very large user bases, Block and PayPal included.
That's a great question. So unfortunately, you're kind of combining Block and PayPal the same bucket, and they're kind of different. The way we see it, PayPal is probably more of an e-commerce play, and you are seeing e-commerce trends normalize post-pandemic. That's number one. Block is more of a brick and mortar play the way we see it. And I think ultimately it's going to be more about what sort of an ecosystem you have that it's going to make it really stickier for consumers to stay within that ecosystem in terms of products and services. PayPal, I think, did the right thing in terms of focusing more on the consumers that actually are what they call the high value accounts. This is where ARPU is going to go higher, and that's probably the right strategy. Square is kind of interesting. They're talking about, I believe in the past, they spoke about 80 million users that touched the Cash App product, but they actually have about 45 million active users. And so I would say both companies are focusing better and putting their energies better in terms of targeting the right consumers. These are the people that are actually going to go back and use that ecosystem more and more to be able to kind of raise the fee per user down the road.